If you have some extra cash, you've probably asked yourself, should you use this money to pay down your debt or to invest? And this isn't always an easy question to answer, but by the end of this video, you'll know exactly what you should be doing with your money. What's up everybody, I am Jaspreet Singh from theminoritymindset.com and welcome to The Minority Mindset. The question of whether you should pay down your debt or invest your money isn't as easy as eeny, meeny, miny, mo. Eeny, meeny, miny, dang it, I chose going to more debt. There are two ways that you can look at what you should be doing with your money in a low interest rate environment like we're seeing in 2020 and what we'll probably be seeing for years into the future. The first way to look at it is screw paying down your debt. Interest rates are dirt cheap, so refinance your loans and use your money to invest your money because you'll get a better return. The second way you can look at it is low interest rates or not, debt is stressful, so just pay down this debt as fast as you can. That way you can breathe a whole lot easier, and once that's done, you can focus on investing your money. The three things you need to look at to answer this question properly are: what kinds of debt do you have, what is your risk tolerance, and what are your financial goals? These are the three things that I'm going to be talking about through this video, so make sure you watch this video until the end. But before we get into that, hit that thumbs up button below, because if you don't, then YouTube doesn't share our video with anybody else. The first question you need to ask yourself is, what kind of debt do you have? If you have high interest rate debt, so things like credit cards or hard money loans, things that you are not paying 3, 4, 5% interest on, then there's no question. You have to pay this debt down before you do anything else. It's kind of funny. People always say things like, man, if only there was a way for me to get a guaranteed 10 or 15% return on my money. If there was, I'd be rich. Well, it is possible, and many people are contributing to it every single day without even knowing it. And if you don't believe me, I'll show you. Your credit card. Your credit card company is getting a guaranteed 15, 20, 25% return on their money that they lend out to you each and every day. When you spend money that you don't have with your credit card, then your credit card company is lending you money at an insane interest rate that you are agreeing to pay them because you are borrowing their money through a credit card. If you have this sort of high interest rate debt, you should not be worried about anything else. The only thing that you should be doing with the extra cash is paying down this high interest rate debt fast. If you have lower interest rate debt, so things like a mortgage or student loans or a car payment, assuming your car loan isn't a subprime loan, then you need to dig a little bit deeper, because you might get a better return on your money by investing your money instead of paying down your debt. Except your returns aren't guaranteed when you invest your money, which brings me to question number 2. What is your risk tolerance? We are moving down the flow chart. The first question you asked yourself was, do you have high interest rate debt? If the answer was yes, then you need to go pay down that debt first. If the answer was no, then you need to come down the flow chart to question number 2, asking yourself, can you handle the risk? Paying down your debt early is a type of investment. Like if you have $10,000 in student loans that are costing you 6% a year and you pay off these student loans 2 years early, you are going to get a guaranteed 6% return on your money for those 2 years that you paid off your loan early, because you get to keep that money in your pocket instead of spending it. Investing your money in the stock market or in real estate can get you better returns than what you're paying on your mortgage or your student loans, but that return on your investments isn't guaranteed. This is where you have to be honest with yourself. How would you feel if you invested your money and then you open up your portfolio one day and you see that your investment lost half of its value? What would you do? Would you panic and start selling? Or would you tell yourself, this is okay, this is just a part of the process? Oh my God, sell everything, sell everything, sell! Being able to manage this risk comes with experience and some financial education. If you have never invested your money before and you don't know how the stock market works or what an ETF is or how stocks work, then you have to understand that you are going to lose money. It is part of the process. Obviously, the goal is to make more than you lose, but not every investment you make is going to be a winner. If you have been investing your money for some time, chances are you have a better idea of how to manage your emotions and how to use your money. Again, this is where financial education comes in handy, and I'm not going to spend too much time on that in this video, but if you do want to up your financial education, we have a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get our free ebook and start reading our financial education emails by clicking the link up here or by clicking the link in the description below. By the way, our financial education emails are separate from our financial news emails. This is where you have to start weighing your answers. If you have never invested your money before and you don't think that you can handle this type of risk or this type of emotional roller coaster, then it might be better for you to pay down your debt. If you can handle the risk, then you need to move down the flowchart to question number 3, which is, what are your financial goals? Let's just be straight with each other, okay? Some of you don't care about the look. You don't care about the fancy cars. You don't care about the fancy exotic vacations. All you want is to live a stress-free life where you don't have to worry about money. Others of you want the high life. You want to be flying first class or private, and you want to be the one driving nice cars, and you want to be the one shopping at Gucci. Neither of these are wrong or bad. You just need to make sure that your risk aligns with your goals. That way you can actually afford your dream lifestyle. If you just want to live stress-free, then you don't need to be taking huge risks. You should be using your money to pay down your debt as fast as possible, because once that debt is history, then you'll be able to breathe a whole lot easier. If your goal is to live large, then you have to take more calculated risks, because more risk comes with more potential return. And if you want to live big, then your focus should be to grow your wealth and your money as fast as possible. Going back to the should you pay down debt or invest your money flowchart, question number 1 is, do you have high interest rate debt? If the answer is yes, then you need to pay down that debt first. The answer is no, then you come down to question number 2. Question number 2 is, can you handle the risk? If the answer is no, then you need to pay down your debt. If the answer is yes, then you're going to come down to question number 3. Question number 3 is, what are your financial goals, and is your goal to just live stress-free? If your goal is just to live stress-free, then you need to pay down the debt. If your goal is to live large, then you need to be investing your money. This is where financial education becomes even more important, because now you're entering a rabbit hole. If your focus is now on paying down your debt, then you need to know how to refinance your debt the right way so you can save the most money on your refinance. You need to know the right payment structure. Should you use the debt snowball or the debt avalanche? If you decide to go down the investment side, then you have to ask yourself, okay, where are you going to invest your money? Is it going to be stocks or real estate or something else? Are you going to start a business? How involved do you want to be with your investments? And what kind of returns do you want? Obviously, I can't go over all of this in one video, but this is what we talk about on our YouTube channel. So if you haven't subscribed yet, make sure you do that. But money management at its core comes down to you mastering the flow of your money. You need to know where your money is coming from and then where it's going. This is the first step to any sort of money management or building wealth, because if you don't know where your money is going, then as soon as you make money, it is going to be gone. You have to spend less than what you make. That way you have money to invest or pay down your debt. After that, it's all about creating a plan for your money, and I'll link some resources for you to help you with that in the description below. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about how to refinance your mortgage and save the most money on your mortgage refinance, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.